Hey there! In this video, I'll show you how to use the dashboard page with ease and confidence. By the end, you'll have a clear understanding of its features, empowering you to make smarter trading decisions. Let's dive in and explore together. Happy trading! The screenshot you see here showcases the vast complexity of option trading. Numerous factors can impact an option's price. While this complexity may feel overwhelming for some, it also presents exciting opportunities for those eager to learn and navigate the world of options. First, you need to consider expiration date for option. Then, you need to consider what strike prices to choose. Then, you will have to think about option price and bid-ask spread. Lastly, if you want to delve into more details, you can also consider the trading volume. Among all these different factors, the key question is, how do you decide which option to choose for opening the trade? To find the best option credit spread with a higher chance of success, you'll need to screen and filter through various strike prices, expiration dates, and option types. Don't worry, setting specific criteria will help you narrow down your choices and make confident decisions. First, let's begin with the historical winning probability percentage. You might be wondering, how do I calculate this, and why is this important? The main focus here is to find situations or setups similar to the current one in the past. By doing this, we can calculate the historical winning probability. We consider factors like the volatility index level, the difference between the strike price and current price, and the number of days left until expiration. Analyzing the closing prices at expiration then reveals how many times the option spread resulted in a winning case. This historical data helps us gauge the likelihood of success for the current scenario. Let me give you an example to make it clearer. Suppose I want to calculate the historical winning probability for opening a call credit spread position. In this case, the strike prices are 2.9% away, there are 10 days left until the expiration date, and the current VIX level is 13.89. What we do is go back 5 years in the data and look for instances when the VIX was in a similar range of 13.89 plus or minus 3%. Then, after 10 days, we check if the closing price was below the strike price, which is 2.9% away from the opening price. The percentage or ratio of successful cases will give us the winning probability. The graph on the right shows the past 5 years of historical data on the S&P 500. In other words, we specifically filter out cases with the same VIX level and then analyze how many times the price at the expiration date remained below or above the strike prices. Inside our dashboard page, you'll find historical winning probabilities at the current VIX level for both call and put credit spreads, covering various strike prices and expiration dates. This powerful tool not only provides valuable insights but also saves you time in making well-informed decisions. Next, let's consider the credit aspect. When you open a credit spread with strike prices $1 apart, the credit you receive is the same as the maximum profit percentage. For example, if you receive a credit of 0.10, your maximum profit would be $10 from a total investment of $100. Our goal is to achieve at least a 10% return from the credit spread. To achieve our minimum 10% profit goal, we filter out available expiration date and strike price combinations that offer more than 0.10 credit when opening the trade. Take a look at the graph on the right. It shows that for both call and put credit spreads, we only screen out positions where we can get more than a 10% return. Get ready to trade with confidence and aim for success. Let's talk about the third screening criteria called probability advantage percent. What's that all about? It's pretty straightforward. I'm searching for credit spread options where the market perceives the winning probability to be lower than it historically has been. This means the market considers it riskier, but based on past data, we know the winning probability used to be higher in similar situations. So, by choosing those positions, the market rewards us with extra credit, giving us an edge. Ever wondered how we determine the market's current perception of winning probability for a specific credit spread? It's based on the credit you receive from your investment. Since we choose credit spread options with strike prices $1 apart, the market perceived winning probability can be calculated as 1 minus credit. For instance, if you receive a credit of 10 cents, the market perceives the winning probability to be around 90%, which is 1 minus 10%. This gives us valuable insights to make informed trading decisions. When the winning probability is higher, you might wonder why the credit is lower. Here's the reason. As the strike prices move further apart or the expiration dates get closer, the trade becomes more certain to succeed. This higher certainty leads to a higher perceived probability of winning, which in turn results in lower credit. It's all about balancing the risk and reward in your trades. When it comes to probability advantage percent, we screen out cases where the historical winning probability was higher than the current market perceived winning probability. Take a look at the table on the right. We calculate this for both call and put credit spread options. Once you've screened out based on the three different criteria: historical winning probability, credit, and probability advantage percentage, I'll summarize the top 10 candidates. They'll be ranked based on probability advantage percent, as shown on the table to the right. With our dashboard page, you have the flexibility to sort or rearrange them according to other factors you'd like to see, such as credit or historical winning probability. Customize your view and trade with confidence. Now that you've screened out and found the top 10 candidates for option credit spread, the next question to ponder is, when is the right time to open the trade? Timing is crucial, and will help you make informed decisions on when to take action. One important step I take is conducting chart analysis on the current S&P 500 index stock price trends to pinpoint the best entry point for your trade. Look for the inflection point where the trend reverses in your favor. Additionally, consider the volatility index and the number of positions already open to determine the appropriate contract amount. Let's delve into the specifics of each type of option credit spread. For call credit spreads, focus on finding the inflection point in stock price trends, where the upward trend starts to flatten or turn downwards. If the stock price shows higher volatility, be cautious and use a higher threshold to distinguish true signals from mere noise. Now, let's talk about put credit spread options. Here, your focus is on finding the inflection point where the downward trend plateaus and starts to reverse upward. If there's high volatility, be cautious as small upward trends might be fake signals. To tackle this, consider setting a higher threshold based on the volatility index. This will help you accurately identify the true inflection point and make more informed trading decisions. When it comes to entering contracts, there are a few key things to consider. In our educational content, we emphasize entering contracts in small amounts on a frequent basis. This strategy helps minimize risk and brings you closer to your calculated winning probability in the long run. However, don't forget to account for variability in contract amount. Here are some factors to weigh in for the contract amount. First, consider existing open positions. Avoid entering new positions if you already have too many open positions relative to the volatility index. Second, unexpected winning probability. Entering more positions is advantageous when you have a higher expected winning probability. Third, on current volatility index. A higher current volatility index leads to receiving higher credit, making it beneficial to enter more positions. Balance these factors and make informed decisions to optimize your trading strategy. Thank you for joining us on this journey of utilizing the dashboard to make better informed decisions when opening option credit spread trades. In our next video, we'll delve into the topic of closing positions and the strategies involved. Stay tuned to enhance your trading skills and take control of your success. Keep learning with us and unlock the full potential of option credit spread trading.